Hello everyone, welcome to the Ichimoku.co daily stock market review for the trading day ending Thursday, June 25th. Firstly to the S&P 500, and here we see a continuation of the trend to the downside today, a follow through based on that very strong downside momentum that was built from the previous day's trading. The sellers were in control for that day's trading, and they've maintained control today, and very strong control by closing down around the low of the trading day. We see this larger shadow on the top of the candle, and the market attempted to rally above the 2114 level and found some resistance there, being very strongly rejected from that area. So moving forward, that's going to be an important area of potential resistance if we do see the market attempt to rally from here. Now, with the market continuing to build this downside momentum, we are coming to an area where we have potentially strong support. Firstly, at the top of the Ichimoku cloud, we know the cloud can act anywhere throughout the cloud as an area of important support or resistance. So that support here extends all the way down through to the 2086 region. We also have the Kijun-sen trading around this area and the Tenkan-sen, so very close to the 2100, 2103, 2104 area. But we also have the round number 2100 area of support and resistance, and it has been an important region. And the confluence of all of these factors around this area does suggest that we're likely to see some buying coming in. Now, if we see the market breaching down through that 2100 level quite early and in a bearish manner, we could see the market testing down to around 2093, and a breach of there could see the market trading much lower. But certainly all the way down through to the bottom of the cloud, we should see some very strong support coming in. Moving next to the Nasdaq 100, and here we see a very solid continuation of the trend to the downside, or actually establishment of the trend here. The previous day's trading was an outside day, but a day where we saw very strong selling, and a lower high and a lower low does re-establish that downtrend. A much larger black body candle here, so the sellers have actually found even more downside momentum for today, and this suggests that we could see a test down below this important 4510 level of support. This is at the bottom of this highlighted yellow zone of support and resistance, and it will be a very, very important level moving forward. Now, if we do see the market trade down to lower levels, we do have the 4483 level as a potentially strong level of support, because we have the Tenkan-sen and the Kijun-sen trading around that area. So even if we do see the sellers follow through, we are likely to see some strong support coming in around that region. Down below there we have the Ichimoku cloud around the 4448 region. Moving next to the Russell 2000, and in this market we also see a continuation of the trend to the downside, but a very different candle, and this has been the stronger market out of all of the equities market, the Russell 2000, representing a much broader range of stocks in terms of market capitalization. We have a candle making a lower high and a lower low, but we have a very much smaller body, and the much smaller body suggests that the sellers don't have the same amount of momentum that they had for the previous day's trading. We've also seen the sellers lose control of the market in this candle. Whereas we saw the sellers closing down at the low, it meant that they had very strong control and they were strongly committed throughout the whole trading day. We see the large shadow on the bottom of this current candle, and we see the market closing just slightly above the midpoint level, or very close to the midpoint level. And that suggests that the sellers have lost commitment, as evidenced by the shadow, and also the sellers have lost control of the market. And this sets the market up for a potential change of trend, and that's what makes this candle a hammer type pattern, and that's the distinguishing characteristics of the hammer, where you have the small body and the larger shadow on the bottom, and that suggests that there is potential for a change of trend, but we always require confirmation, so we will be looking for a higher high and a higher low. Now, importantly also, we saw the market finding support at the previous resistance level, the previous major swing high at 1278, and that suggests also that we could see that area change character from from resistance to support now, and it has acted as support in a minor level. And if we do establish a higher high and a higher low here, it will establish that area as a swing low and an even more significant area of support. If we do see the market rally through this area and establish a higher low, potential resistance at the major high at 1296. Now let's just have a look at some of the other asset classes here, and looking at the Vanguard Footsie All World ex-US ETF. So we're looking at the world equity markets, comparing them, and world equity markets without the US included, comparing it to the S&P 500 ETF, which is SPY. VEU is the code here, and here we see trading within the Ichimoku cloud, so neutral trading. But if we look at the relative performance here on the first subchart, we are strongly outperforming. VEU is actually strongly outperforming the S&P 500, so strongly outperforming the US equity markets. We have momentum of that relative strength actually beginning to trend up quite strongly. So there's an opportunity here for us to consider switching away from US equities into world equities other than the US. Next, moving to TLT is the code. It's the iShares Barclays 20 plus year Treasury Bond Fund. So we're comparing the US bond asset class to the US equities asset class, and here we see on the Ichimoku cloud very strong downtrending price action, trading below the cloud significantly, down below each of the Ichimoku indicators and below the Tenkan-sen for the last couple of days, attempting to rally and finding some resistance around there. In terms of relative strength, still strongly underperforming. But over the last couple of days, that underperformance has lessened a little bit, but still underperforming, but not terribly strongly. The momentum of that underperformance is still quite negative, and suggesting that we certainly shouldn't be looking at allocating to bonds away from the US equities at the moment. Next, looking at gold as an asset class, and GLD is the code, and strong underperformance here on relative strength, in line with a negative trend in all three timeframes on Ichimoku. Very strong support down around this 1155 region, and some uptick in momentum in terms of relative strength, but certainly not significant here. Certainly not an asset class that we should be looking at allocating to away from US equities. Also, silver as an asset class, SLV is the code, the iShares Silver Trust ETF, trending down in all three timeframes, trading below each of the Ichimoku indicators. The Chica span is below the corresponding price action, so we have solid downside momentum. Has been underperforming in terms of relative strength and quite strongly at times, and continues to strongly underperform the US equities. Next to the real estate asset class, and the Vanguard REIT ETF, VNQ is the code, is the one we're analysing here. Very strong downtrending price action, solid black body today, a very significant downtrend over the past week, establishing a new swing low here by taking out the previous low. Very significant series of lower peaks and lower troughs in that longer term time frame. Looking at the relative strength here to the US equities markets, very strongly underperforming, and that momentum is to the downside on the relative strength, so certainly one of the weaker performing asset classes. And to the real estate asset class outside of the US, and this is IFGL. It's the iShares Footsie Global Real Estate ex-US Fund ETF, and very similar type of trading activity, trading below each of the Ichimoku indicators, supported by the Chica span. A very, very strong underperformance, trading down below that first standard deviation Bollinger Band in terms of relative strength comparative, and certainly one of the weakest, in line with the US real estate asset class. And now just looking at some of the equities markets in certain countries, and because we've identified that we have some of the external equities markets showing some strength in, this is all very short-term time frame, by the way, on daily charts, so we're going to try to find those countries that are exhibiting strength. So firstly, looking at the Australian equity index fund, EWA is the code of the ETF, and here we see very weak trading down below each of the Ichimoku indicators, quite a large gap down over the last couple of days, giving us a bearish market in all three timeframes. Very solidly underperforming the US equities markets, except over the last couple of days prior to today's trading. We did see some improvement, but then some further deterioration for today, so that's not the one we should be looking for. Next to Canada, EWC is the code, and very weak trading down below each of the Ichimoku indicators. Strong underperformance in the recent past, an attempt to rally, but still not performing outside of that upper band. Quite a neutral performance at the moment. EWD is the Swedish Fund, and that was a solid performer, as were quite a few of the quite a few of the European equities markets, but a deterioration over the last day or so has seen a breach down below that Ichimoku cloud, and the relative strength moving from within the bands to strongly outside of the bands, so strong underperformance. EWG, Germany, solid underperformance, one of the European markets that was solidly underperforming, an attempt to improve, but now some deterioration, but still at the moment above the middle of the bands, and quite a neutral performance over the last day. EWH is the Hong Kong market, and trading within the Ichimoku cloud, not solidly underperforming, only just underperforming, certainly no strong outperformance, and a moderate performance here for Hong Kong. EWI is Italy, and one of the markets is trading up above the Ichimoku cloud and each of the Ichimoku indicators, selling off over the last couple of days. Doji candle forming around this first support, and we'll see whether we see some strong buying coming in. There's an opportunity for this market to bounce. Hovering above and below the relative strength bands here, so not a good market we perhaps should be looking at here, because there hasn't been any clear direction in terms of relative performance, in terms of outperformance or underperformance. Next to Japan, EWJ is the code, and it has been trading within the cloud for some time, attempting to break out, but no strong follow through, testing back within the bands at the moment. Some relatively strong underperformance against the US equities markets, an attempt to move outside of the upper bands, but certainly not doing that in a significant manner, so no strong outperformance at the moment. EWK is Belgium, and some strong performance in terms of Ichimoku, so a relatively strong market. Up above the upper bands at times, but not significantly so, and unable to maintain the relative strength above there, and we've seen that occur once again over the last few days, so certainly not a market that we should be looking at allocating to. Next is Switzerland, and EWL is the ETF code for that, and here we see very, very strong underperformance, strongly underperforming for the last couple of weeks. Momentum of relative strength has been trending down quite strongly, and trading down below that lower band, and we see the very solid bearish breakout down below the Ichimoku cloud. This strong bearish breakout has been from a flat part of the cloud. We mightn't see a continuation of that. We do need confirmation of that with some strong follow through to confirm the strong underperformance. Watching the upper band here at $34 for potential resistance to come in if the market does rally to there. EWM is the Malaysian index fund, and that has been a very, very strong underperformer for quite some time, still trading down below that lower band in terms of relative strength. In terms of Ichimoku, trading well below each of the Ichimoku indicators, looking a little overextended in the depth away from the Ichimoku cloud, so something of a rally wouldn't surprise, but when we've seen any rally, we've seen the Tenkan Sen holding as resistance, so that's an area we should be watching for, potentially strong resistance at 1240. EWN, the Netherlands ETF index fund, is still attempting to trade up above the Ichimoku cloud, has found some support at the bottom of the cloud in the recent past, some relative outperformance over the last few days, but not terribly strong. EWO is the Austrian index fund, underperforming here over a period of a week or so prior to the last few days, and still not able to rally up through that upper band. So some underperformance at the moment, not terribly strong for today, but certainly with the market trading down below the Ichimoku cloud, it is negative in all three timeframes. Taiwan has been a market that has been moving against the general trend here with a lot of the markets, so that's one that we certainly could be looking to, but I think we need to see this market breach up through the Ichimoku cloud first. We do still have a bearish market in that longer term time frame, and we have seen the Taiwan index fund able to rally off the Tenkan-sen support, trade through the Kijun-sen indicator, but we certainly could see some resistance coming in around the bottom of the Ichimoku cloud at 1623. Previously strongly underperforming the US equities market, but at the moment now it has broken out up through the top band in terms of relative strength, and momentum of relative strength is starting to trend up quite strongly. With a black body candle forming as the market was attempting to rally, not a lot of faith in a breach up above the Ichimoku cloud, but I think before we look to allocating here, we do need for the market to trade up through that cloud. EWU is the United Kingdom Index Fund, and here we saw this ETF briefly trading up above the Ichimoku cloud. It was strongly trending up previously. We saw some underperformance in the recent past, and then over the last couple of days prior to today, some relative outperformance, but it has come back to within the bands over the last few days, and momentum is now starting, of relative strength is now starting to come off with the market trading back within the bands. So a false breakout here previously, not a lot of faith in the UK ETF index, equity index ETF trading back outside of the bands over the next couple of days. Next, looking at the Russian equity index ETF, RSX is the code. It's the Market Vectors Russia ETF, and previously we saw a breakout down below the Ichimoku cloud, and once again today a breakout down below the cloud, so giving us a bearish market in all three timeframes. Previously strong underperformance against the US equities markets, and in the recent past we haven't seen the ETF able to rally outside of the bands in terms of relative performance to the US equities. Today we've seen a deterioration again down below that lower band, suggesting that this has been in relative terms an underperformer against the US equities. So even though we have seen some sort of an improvement in the relative strength comparative of the Vanguard Footsie all-world equities markets against the US markets here, when we looked at the individual markets to identify which were the strong performers, the only one that we could identify at the moment was really Taiwan, EWT, with the lack of or the deterioration today with the market trading up very close to the Ichimoku cloud. It certainly does suggest that it might be a little bit premature to look at allocating away from US equity markets into other equity markets.